Right. Um, so, as I said, I'd like to welcome you to our webinar session, and we look forward to an exciting session today, where at the end of it, I do hope that we all will walk away with a much better understanding of the topic of blockchain and crypto. So I'm going to do a quick opening, and in the process, I also hope to share a little bit about what each of our speakers will be talking about. Yeah. So let me start by highlighting that today we're talking about cryptocurrency. Cryptocurrency versus blockchain, what's the difference, right? So as a lot of us might know, blockchain is really the underlying technology. Some people call it the distributed ledger technology. And oftentimes we hear of these terms which are commonly associated with the technology: transparency, immutability, as well as distributed consensus. So Bitcoin, as well as cryptocurrencies that we're going to talk about, is really a application or a use case of blockchain. In fact, Bitcoin can be thought of as the first as well as the most famous use case and application of blockchain. So today we're going to focus our discussion a little bit on cryptos, and also understanding some of the key trends associated with that. So I'm sure that a lot of you are here partly because of the increasing price in the Bitcoin, which makes it increasingly an attractive form of investment instrument to many people. So one of the key things that we hope to be unpacking today in our webinar session is to ask this question of whether crypto is becoming mainstream and why. And here you can see that we can't be faulted for having these impressions because of the news articles that we are starting to see. So here we're going to invite Jimmy Ong. Jimmy is actually a partner in Ernst & Young, and he will actually talk us through to help us to understand essentially what are some of the key trends for Bitcoin and blockchain in the past and to current, and help us to also understand how the COVID-19 pandemic might actually be be affecting the developments in blockchain. Yeah. So another key topic which people often associate with blockchain or crypto is this whole concept of DeFi. DeFi, I took this definition of Investopedia, is defined, is short for decentralized finance. Basically, the whole concept here is whether blockchain can eventually replace institutions like banks, such that we can do away with this middleman and we can have a system where software that's written on blockchain actually makes it possible for buyers, sellers, and lenders to interact with each other. So today we are very glad to have with us Jin Chao, who is from Binance, which is one of the world's biggest Bitcoin exchange. And he's going to share with us his views on DeFi, as well as from an exchange perspective, what is finance views on some of these issues. So finally, we're going to talk a little bit about trending topics in crypto. So in this case, there's a few very interesting topics that we will be getting to. We'll be talking about central bank digital currencies. So Vin Menon is going to walk us through that. Essentially, CBDCs is the use of blockchain as the underlying technology to support the distribution of digital currencies which are issued by central banks. We're also seeing increasing interest in crypto funds. So Vin is also going to talk a little bit about crypto funds as investment vehicles, why we are seeing these trends and what we can expect. And finally, we hope that we'll have time to talk about NFTs, which is non-fungible tokens. NFTs really is in contrast to Bitcoin, which is what we call a fungible token because you can exchange them for one another. Non-fungible tokens really refer to the trend of using tokens to replace things like paintings or assets like apartments. So that is not directly exchangeable, but a lot of people are trading or investing in these non-fungible tokens, right? So with that, you can see that we have lots of interesting topics that's coming up in this next hour or so. So without further ado, let me invite our first speaker. So our first speaker is Jimmy Ong. Jimmy is the Singapore Technology Consulting Partner and Asia Pacific Blockchain Leader at Ernst & Young. His expertise is really on enterprise blockchain, but at the same time, he's also very familiar with the realms of crypto and how we can connect it with the business ecosystem. So without further ado, let me invite Jimmy Ong.
Thank you so much, Prof. Bo, for the kind introduction. And a very good afternoon to everybody as well, either fellow alumni or students at NTU as well. So it's a great time to be able to connect and discuss about a very interesting topic. A topic certainly has its own fair share of hypes, a topic that also has its own fair share of realities as well. So I hope that today's session will be an interactive one as well. Prof gave a pretty good introduction already, but essentially, I think what I like to share about is a little bit, a little bit of a history lessons as well. Some people can argue that that's not much of a history with Bitcoin, given that it's such a relatively new technology. But yet, if you look back, it's been more than 10 years since it was first birthed by this character called Satoshi Nakamoto, right? When he released a white paper on Bitcoin and about blockchain, and the first Genesis block was introduced, that's where it start to blockchain as a technology start to gain traction, right? And the very early days, in fact, I would just say pre 2017 days was a lot of discovery. A lot of people trying to understand what the technology is about, and the fact that it was around before that. In fact, it's unknown to many people. But yes, that technology is something that people is trying to discover use case for, and that created a lot of talk, right? Then people start to say, hey, can I use it for supply chain? Can I use it for trade and finance and so on? So the enterprise blockchain realms during the early days of Bitcoin was about discovery, was about understanding what use case can it solve uh, in theory and in reality as well. And during the early days, especially in 2012, 2014 time as well, BTC also gained not too good reputation because a lot of people use it for money laundering and crime. So it's got a little bit of a negative reputation as well. So the early days took a while, and the peak of it, really came about in 2017, right? That's where Bitcoin reached almost $20,000 at that point in time. It was a peak also, and I say it's peak because there was also a hype around a whole load of ICOs that was launched during those days. ICOs are initial coin offerings, and you will know that in fact a lot of ICOs have white papers that are in theory only and are practically not fulfilled. So investors into ICOs in the early days might just discover that the things that they have invested in fact, doesn't amount to something solid in the end. In fact, in 2018, we did a research on the class, what we call the class of 2017, and those ICOs, 75% of them, 1 year after they raised a fund, still have not had a concrete solid product in the market. So it's quite telling about some of these ICOs as well. So it's not surprising that at the peak of 2017, the peak of the hype, where everybody claimed that really Bitcoin or rather blockchain is the technology that's going to shape the next few years, it fell into a stream of disillusionment. Of course, Bitcoin being such closely related to blockchain fell It dropped to its lowest point about 3,000 plus, up from 20,000. But it was also during this stage in 2018 that real solid research and understanding of blockchain came about, right? Because there's a lot of discussion, there's a lot of arguments as well, and people really understood some of the technology behind blockchain. That's where some of the mainstream enterprise use case came about as well. So you will see, for example, supply chain and traceability being discussed quite often as well. Some of those projects that were in the early stages of POCs and pilots went live. So traceability was a big topic as well. You will see many use cases on food traceability, on pharmaceutical traceability and products traceability as well. Supply chain and trade and certification become quite widely used, in fact, from blockchain. In fact, some of these days, when you talk about certification, you might not know that it is actually blockchain technology behind it that's fueling and that's empowering these use cases as well. And it is during this period of trial that the credibility and the usage of enterprise blockchain slowly start to pick up. You see in 2018-19 period, some mainstream banks in fact started to explore blockchain as well. Last year, you might have heard of DBS also launching custodian services, planning to launch exchange as well. You will have heard of HSBC together with SGX issuing their first digital asset, bonds, which is built on the blockchain technology as well. And of course, there's a lot of monetary authorities exploring what is known as CBDC, right? Central bank digital currency, and there's a whole big area as well. Different banks or different central banks are exploring either from a retail perspective, like China, which have their version of DCEP, but other banks like the Hong Kong Monetary Authority, MAS as well, explore blockchain more from a wholesale or settlement perspective as well. So, and from 2018, you'll see that growth of slow adoption. And in the last few months, there's a lot of talks around decentralized finance, a lot of discussion around NFTs as well, right? Especially with the Beeple sale of his digital art is starting to be adopted by more and more people. Are they mainstream yet? I don't think so, but are they getting there? Certainly so. There's a trajectory of more and more acceptance of NFTs, not just for art, for songs, musics as well. So a lot of you would have known, BTC peaked recently at over $60,000, and is fueled by many reasons as well. A large part of it may be speculative, but there's certainly a part of it that is around institutional investors coming into it as well, believing that it can be a good store of value, believing that the currency will be a stable form compared to what you see in a US dollar, where the detractors are saying there's too much printing of the US dollars in the market. So that's where we are at, right? So starting from 2008, 2009, a very early educational stage of understanding what blockchain is about, to today, where it has gone past a hype, it has gone past a trough of disillusionment. And my feel is that in the market, there are a lot more people that understands what blockchain can do as an enterprise use case, and what blockchain can do in the form of cryptocurrencies and DeFi. And slowly there will be that take up of mainstream use cases along the way, as well as we see continue to grow in adoption. So that's all I have, Prof. Bo, and I can pass the time back to you, please.
Thank you so much, Jimmy. That was a very insightful sharing. I think I really learned a few key takeaways for me, right? I think Jimmy shared basically the development path of blockchain and crypto. And I think he highlights that although after going through the trough of disillusionment, this is where we see a much better understanding and perhaps the path towards mainstream adoption, which I think starts to help us to put things in perspective. Yeah. Thank you very much, Jimmy. So now if I may invite Jin. Jin is actually the strategy officer for Binance. He leads the corporate development department, which is generally mainly focused on M&A, JV, strategic partnerships, Binance Labs, the Binance Launchpad, and Binance X. So Jin is going to talk to us a little bit more on the topic of DeFi. Yeah, Jin, over to you, please.
Hey, thank you. Thank you for having me at this event. And I wish I could see the audience out there. I generally like to talk to interactive audiences because I get a sense for who's a crypto owner and for how long. And what I've found over the years is that is an increasingly higher percentage of each audience I talk to, which is promising. So to Jimmy's point on adoption, I would be remiss as a representative of an exchange if I didn't say that Bitcoin is one of thousands of currencies out there. However, in aggregate, Bitcoin currently represents about 50% of the entire cryptocurrency market cap, which is a little over $2 trillion right now, with Bitcoin representing over $1 trillion. So I think it's fair for us to focus the conversation on Bitcoin and how, and that has largely impacted the entire market and how we've emerged into different services such as DeFi. So to set the stage a bit, there's a few, well, there's a sort of a perfect storm of factors that have led to the current rise in DeFi. I'll go through that a bit, and then I'll talk a little bit about what that means to users and what that means to, and why we're at the stage where we are right now and what's to come. So let me start with the adoption level. Jimmy pointed out that the last peak of Bitcoin was in 2017, the last one before now. And what I'll point out is that we're in the fourth cycle now. So after the 2017 peak of around 20,000, it did drop to 3,000. It's about an 85% drop. But if you take a look at the historical Bitcoin prices, there were two previous cycles where Bitcoin prices actually dropped over 90% in each of those cycles. So 2017 was actually to 2018 was actually a smaller drop than in prior cycles. And then in every cycle after that, it's never dropped below the prior peak, right? So if you extrapolate that in the cycle that we're in right now, if that follows the same pattern, then we will likely not see a fall below the previous high of 20,000. That's not a prediction. That's just pointing out the patterns in the past. The reason why that matters is because in each of those cycles, the adoption level has increased. So if you were to track the volume and number of users and number of wallets, each time there's been a peak, it drives a lot of attention to the market and a lot more users. So prior to 2017, we're probably looking at less than 10 million active wallets. Today, we're looking at close to 100 million. So it's an order of magnitude difference. That said, we're still under, we're probably at around 1% global adoption. And so that is why the price continues to be volatile. We're still not at a tipping point where I would like to see, which is around 10%, where you might see more stable prices. And the reason why that matters is until you have stable prices, as a currency, it's not from a human psychology standpoint, if you have a high volatility asset, you're not really willing to spend it on regular day-to-day activity. So if you're not spending it regularly, there are some cases where where it makes sense to spend it, but for the most part, people continue to invest in it. And the evolution of DeFi has gone from, even from an exchange level, it makes sense. You have, we're centralized, Binance.com is a centralized exchange where you can exchange assets. And we had a very active spot market. We then created a decentralized exchange for people who are a little more advanced and feel comfortable managing their own assets. So that's there's a governance difference between the centralized and decentralized exchanges, which we both operate. From there, the next level after offering spot services are futures and derivatives. So over about a year and a half, almost 2 years ago, we launched derivatives and futures. And so the volumes in those markets are much higher than even spot, which mirrors the traditional markets as well. So then beyond trading, the other logical services for an asset that is too volatile to spend is to actually have some financial services. And so DeFi is really a logical offshoot of, okay, if I'm investing in it and I don't want to spend it, are there ways where I can park it and earn interest on it? So can I lend it to other people? And so that's where staking and lending and those services have emerged recently. So it is logical that then after in a future time when prices are more stable, the financial services will then be that much more advanced, where not only will you have a lot of different payment options, but you'll also have a lot of other use cases that are still to come. And from a native pricing services, one of the reasons why we view cryptocurrency as being volatile is we were comparing it to different fiat currencies. So whether or not you're comparing it to the Sing dollar, the US dollar, the euro, most of the world still thinks and operates on their local fiat currency. But I do believe that as this adoption increases, you will start seeing natively priced services. So then if something costs, half a Bitcoin, you won't be thinking about how it translates to your local currency. The price is just half a Bitcoin. And that's what DeFi services are right now, is things priced natively in crypto. So if you look at how the rest of crypto trades against each other, how Bitcoin trades against Ethereum, how it trades against our token, the Binance token, how it trades against other things, you'll see a lot more correlation over time, over the history of cryptocurrency. So the other thing I do want to touch on quickly are what this means for users. DeFi does mean different things to different people. In a sophisticated market like Singapore, or developed countries like Western Europe and US, where there's very sophisticated financial services available, crypto has largely represented an opportunity to invest in some very interesting asset allocation theories. You see now, as Jimmy mentioned, a lot of institutionals coming to this market, and they're looking at it as a hedge against inflation. And frankly, there's a lot of reasons to do that. But that's a validation that this is an asset similar to other commodities that they're willing to invest even their treasuries in. But if you look at what it means to the regular retail user, then depending on where you are, if you're in Singapore, this is a good opportunity for you to look at certain types of investments, go on margin and trade in different types of assets where there's actually high volatility. There's a lot of news and factors that drive prices. So if you like that kind of price action and you're a natural trader, this makes for a very interesting use case. If you're in an undeveloped country or an emerging market where you're not traditionally banked or serviced by banks that are reliable, or even have a central bank that's reliable, then this is really is a lifeline to financial services and an ability to take loans, provide loans, and have just fundamental banking services, transferring funds from one family member to another. So if you're in Venezuela, which is in a hyperinflation mode, or Turkey, where your local currency has high volatility against some of your largest trading partners in Europe, there's a lot of different applications. In fact, much more basic applications for cryptocurrency and for DeFi, and being able to go around the high cost structure of banks, which as a middleman, as you know, charge a lot of fees. They charge fees for almost everything you do. And so this removes that, and those costs are justified, right? In the past, they've had to underwrite credit, they've had to take on risks, they've had to build physical locations, they've had to hire a lot of staff to ensure compliance and things like that. A lot of these things can now be done on the blockchain, and so it reduces a lot of these costs and makes for a much more efficient use, frankly, of financial services. The last thing I'll touch on is, again, why you see institutional money coming in. This isn't exactly DeFi, but I do view it as a little bit, in that people are now looking at Bitcoin as the most decentralized currency, as a true asset of value. And the big piece of that is that they're looking at the centralized currencies out there, right? Everything issued by government. And they've seen 40%, 30 to 40% of the money supply increasing over the past year. So when we talk about the impact of something like COVID and the pandemic, that's really it. Bitcoin was born out of the turmoil that the financial crisis caused in 2009, in 2008, 2009. The amount of quantitative easing that occurred then, it was 5 years worth of quantitative easing that they did in 1 year during the pandemic. So whatever the rationale was for Bitcoin in 2008, 2009, is 10x given the quantitative easing that's happened in the past year. And for those of you who don't know, that's just central banks printing money, right? So the US dollar money supply has increased 35+%. I believe it's been similar in China and in Western Europe. And again, that amount of money, it took 5 years to print. In fact, they didn't even print that much. I think it was only an increase of about 20 to 25% of supply after the financial crisis. So that's this is sort of all the factors that are creating this perfect storm in crypto, and DeFi has been the natural evolution of that. I guess the last thing I would mention is that the concept, all these concepts of decentralized ledgers and blockchain have been around for a long time, but the technology really is caught up. So you couldn't have done this before the internet. And then in the early days of the internet, the network speeds probably weren't there. So now really we see this confluence of the technology catching up, the macroeconomic environment catching up, and now the human psychology catching up of people understanding that, yes, this is a real solution to real world problems. So I think I'll wrap it up there and join you guys in Q&A.
Thank you so much, Jin. I think Jin has given us a very nice overview, telling us a little bit about why we are seeing this increased interest in DeFi, sort of this tipping point that we're going through, increasing adoption of Bitcoins and other crypto, this critical mass of users, as well as the fact that this is really useful in some of the developing countries, right? And the fact that technology is catching up. So thank you so much, Jin, for the very insightful sharing. So last but not least, let me invite Vin. Vin Lennon is basically a serial entrepreneur, and he is also, hold on, let me get to bring his profile. So he's a serial entrepreneur, and he's also a co-founder of a Bitcoin fund. So he's been in the fintech space for a long time, leading startups from inception to growth across various continents. So Vin today is going to share with us some of the trending topics on Bitcoin, and we hope to learn about these latest technologies and trends from him. Vin, over to you.
Thanks, Prof. Bo. Thanks, NBS, for giving me this opportunity. My name is Vin, and I've been into blockchain space, actively creating the blockchain ecosystems since 2015. So it's close to 5-6 years now. And maybe my first Bitcoin I bought, which was 2011, in the 40s range. So I've been passionate about technology and blockchain. I would say that blockchain is going to be the next internet. So blockchain is going to create a new wave of economy. Like social media created a lot of us publishers and creators and entrepreneurs. Blockchain and crypto is going to create a lot of us as investors. So the traditional investor route, like private equities, VCs, are going to be getting challenged, I believe so. Now, let's talk about a couple of points which highlighted by Jimmy. He was kind enough to explain to us the hype cycle, which was very interesting for all of us, and especially the people like us who've gone through this hype cycle. And Jin was talking about the real use cases of cryptocurrencies into the real applications, and which is actually every cycle happens. In the past 3 cycles, we have seen that it has actually never gone below to the previous price of Bitcoin. And this is also contributed by a blockchain or a Bitcoin algorithm called halving. So every 4 years, it stops, or it halves the production by mining. So these are the things which is actually helping the entire blockchain industry and the crypto industry moving in a very different directions. So apart from cryptocurrency, which is one of the applications of blockchain, central banks and regulators started looking at how can we contribute to this fast growing technology, and they started launching their own legal tenders or the central bank currencies in crypto or in blockchain. And that is a new wave, and that is going to create a lot of adoption, mass adoption across the globe, because we all know that crypto is becoming like a commodity now. So like Jin said, 10 million wallets to 100 million wallet right now, it is a 10x growth. And we are seeing that even the cryptocurrency market cap from 200 million roughly a year, 2 year back to now 2 trillion. So there is another 10x kind of a growth happening. So the kind of growth happening within this short span of time is huge, and central banks cannot stay away from this. So we have seen digital yuan from central Chinese central bank launching the pilot with 300 million, and which went really huge success. A lot of US based companies also were part of this, including Starbucks. So this kind of wide adoption is happening on the central bank currency level. Last few weeks back, we heard about Japanese central bank launching CBDC as well. Then we heard about Indian central bank, the Reserve Bank of India, launching the CBDC as part of an alternative as well. So what is going to create that for all of us? So one side, we will have a central bank digital currency, which is on a hybrid mode, where issuance is centralized and distribution is decentralized. On the other side, we will have fully decentralized currencies like Bitcoin, like Ethereum, and the combination of these two pairing in certain parts of the world following the regulation, which will create a new wave of economy. So most probably the fiat or the physical bill may be redundant very soon. I mean, let's think in that direction. Now, all these activities around central bank is actually leading towards creating crypto more of a regulated instrument. So we have been working on the regulated crypto space for quite long. So we also launched a crypto fund, which is fully insured by Lloyd's of London syndicates and the first Bitcoin denominated fund in Asia. So what we have noticed that a lot of people sitting on Bitcoin, but again, how do they increase the value apart from the capital gain which is happening? So there are people who are ready to use this as a fixed income product where they want to stake it either through the exchanges or through the funds, who is actually responsible for taking care of the fund and making sure that the returns are generated and returning the upside or the success to sharing with the investors. So this is how the crypto funds started forming up. And in the ecosystem which we are talking about, we are having a DeFi network, which is preliminarily creating a robo-advisory kind of a plan for helping crypto investors or the general public or the mass to start adopting crypto investments. So most of the cases, we all seen that DeFi is becoming a little bit sophisticated because you need quite a lot of technology knowledge, and you need to connect to wallet, and there's a different class of knowledge which you need. So what's happening is that is preventing people to get into DeFi or get into crypto, or maybe they have to go through some sort of an intermediary level to get in there. And most of the centralized exchanges like Binance is doing amazing job by deploying the wallets on everyone's smartphone. But on the other side, in terms of the investment, if a robo-advisory, which is very similar to the wealth management or the traditional robo-advisory, is being deployed into crypto, what is going to happen? So that's a level of sophistication which we are trying to bring in, and that is focusing towards mass adoption as well. So in terms of the crypto funds, when we are looking at Bitcoin prices shooting up to 60 over 1,000, what we have seen is Bitcoin is being used as a stored value by most of the high net worth individuals, funds, or even the public companies. Public companies like Tesla, MicroStrategy, and many more. Even there are rumors about Twitter and Oracles of the world is actually looking at Bitcoin as a treasury reserve. So what they're trying to do is, instead of keeping their treasury reserves in US dollar as a stored value, they started investing into Bitcoin. and they are promoting this. And this trend is becoming quite a prominent trend around. Now, the next trend which we are trying to look at is NFT. NFT is not fungible token. And we all knew that around 2016-17, the very famous NFT came up, which is called CryptoKitties. And that was primarily used for one of the games. But then that standard, which is ERC 721, which became quite popular. And now that is becoming a representation of real world assets. So we have seen the Christie's auction, which the artwork auction for 69 mil, and we are seeing that more and more real estate funds are becoming non-fungible tokens and getting into the marketplace to distribute. So that's another area for us to watch for. I think, I think I will, my time is running up. So I'll stop here and wait for the Q&A sessions.
Thank you, Vin. I think Vin has been very helpful in helping us to understand key trends like CBDC, as well as non-fungible tokens, as well as the trust funds. Yeah. So let us now move into our Q&A segment. I can see that many of you are already typing in the questions that you have in the Q&A panel. Many insightful questions here. I would encourage others to add to that if you do have. Not sure whether we can get to all of them. So shall we invite the panelists to turn on your video, and then we can go into the Q&A segment? Jimmy and Jin. Yes, very good. Thank you so much. So I can see the questions that are coming in. I think there are a few, I would classify them in a few areas. I think there is a significant number of questions where people are very interested to know a little bit more about the challenges associated with crypto. So I'm going to pick up on some of these questions relating to the regulators, right? So for example, I think Cheryl's question is that in Asia, many regulators are still very wary of crypto in general. And it seems like they're clamping down on providers that are reaching retail investors. What are your views about the regulatory regime developments in Asia? Are they supporting this interest or not? And I guess an associated question to that is, some of our attendees are asking, given all these good things about what we are saying, given its popularity, despite the risks, why are some countries banning or prohibiting cryptocurrencies? So I was wondering whether, Jin, you want to have a go at this?
Sure. Thanks, Prof. Bo. Maybe I can just dissect the regulatory aspects into a few areas. I think the first area probably is just safeguarding the retail investors, right? So I think that's one part of it. There's another part of it that's about making sure the product that comes out, is beneficial for the country. The product may be crypto-related products, it may be crypto themselves, and so on. So there are a few aspects when it comes to regulatory, and maybe I just cover a few aspects, right? So I think for the for the safeguarding of the retail investors, because of a hype, there can be an unwarranted or irrational rush into buying cryptocurrencies. And some, like all investments, right? So there's a fundamental elements and there's speculative elements. And investors also need to be aware what they are buying into. But because of the hype, and the ability to be able to purchase some of these through unregulated exchange. So I feel that that's where some bits of regulation comes in, where either it comes in the form of warning, or to the other extreme, an outright ban as well, right? So I always remember this story in the early days of crypto. One of my colleagues bought if I recall, he bought BTC at $200, right? It's looking at today's prices, it's really very cheap, right? And he held it until it's about $1,000. And at that point, everybody is telling him, hey, $1,000, 5 times already, better sell, right? Otherwise, you might lose, everything. And he bought it through, in those days, was a very new exchange, right? It's called Coinbase, right? Today, you look at Coinbase, it is no longer what you call a startup, right? I wouldn't call it a startup anymore. It's mainstream, it's well regulated, it's got good, I guess, compared to early days, much better processes behind it now. But what happened was he sold it as $1,000 BTC, but he never got his US dollars back, right? So he called up MAS, said nothing much I can do, right? He called up Coinbase, couldn't reach anyone there, and essentially, he didn't know where his money went, right? And so that was the problem, right? Even though there are the business is probably proper, but because it's new, it's not regulated. There's no recourse, right, for retail investors. So, but now I think that more and more countries and more of these large exchange are really well regulated, and they have come a long way since the early days. The other part of regulation is just probably about the products, right? So, as fintechs start to come on board, becoming mainstream, mainstream banks are also starting to explore cryptos as a product or assets or products around crypto, like custodian services, like exchanges and so on. So the infrastructure and things and governance around it need to be in place as well. And that's where regulators have a means of doing it as well. And I guess my third point is, I mean, different governments also regulate for different reasons. The case in point is also, if you look at DCEP in China, they launched their own version of cryptocurrencies, more also to, I feel, to gain some form of control back from technology companies that has been dominating the digital payments space, right? So there are regulations that's kicking in as well. There's catching up with the advancements of technology. So, but that is different set of reasons out there that governments are regulating this market as well. So I'm sure Jin or Vin would have lots to share as well.
Yeah, so maybe I can invite Jin to add to it as well, because I'm sure you face a lot of regulatory responses in your daily work. Yeah.
Sure. One of my favorite questions. Now, I think the best way for me to address this, while still kind of adding substance to an answer, is, look, the regulators are in a hard spot, particularly when it comes to new technology. If technology had to rely on regulators to get things through, nothing would happen, right? Regulators are there to serve the people first and foremost, and hopefully that's their primary objective. But as Jimmy mentioned, there is also sort of country interests as well, and frankly, they're not always aligned. They should be aligned, but they're not always aligned. And I won't go into details on that, but you can look at the petrodollars, and you can look at what the ability of printing money means. There's a fundamental question about what is money that people need to really educate themselves on to understand some of the dynamics at play. But I won't get into that. I'll go into more basic things. So whether it's the internet, whether it's social media, whether it's smartphones, data privacy, these types of things, these are all, they're all intertwined. And when there are new technologies, regulators are generally hard pressed to respond to that, mainly because all the unintended consequences of policymaking aren't clear until there's sort of some experience and sort of hindsight to see what's going on. And then also with new technology, you don't really quite know what people will do with it. So at the end of the day, technology is just a tool. Blockchain is a tool. You can do very good things with it, and you can do some very bad things with it. But for the most part, good things happen with technology overall. Email is a communication tool, but you can do a lot of bad things with email. So it's difficult to regulate, and I empathize with that. So the way I view it is, as an exchange, as long as we're taking care of the users and looking after our users' best interests, that should align with the regulators. Now, each country is going to have a different view on what's proper, and that's our challenge, especially since we're operating a global business. We have a very robust compliance department. They spend a lot of time and resources making sure that they're on top of where those key things are that we need to address, and we do that. That said, if you went by the book on everything, you would never kind of see innovation. Same thing with Uber, right? Like, I think if you looked at Uber and the model of ride sharing, that's been a net benefit to millions of people around the world. And sure, has it hurt some taxi medallion holders? Yes, it's a small displacement. I apologize. So there is a cost to things. And the question is, what costs are countries and regions willing to take for the greater benefit? So that's how we need to view this from a large scale with any technology. So that's our primary focus. If we're doing what's best for the user, we're generally doing what's best for society, and then therefore that should align with countries. Now, if there's certain things that countries are very have a lot of experience with that we haven't seen and bring forth to us, then of course we'll comply with that because we need to and we should. So that's the probably best answer I can give at the moment, because there's no sort of one size fits all when it comes to this.
Yeah, I think thanks. I think both Jimmy and Jin, the two of you summarized it very well. Right? The regulations are there to protect the investors and the individuals, but at the same time, there are some costs to doing that in terms of reducing innovation. So there's a balance that is always, I guess, the dance that companies like Binance and Vin's company might need to engage in with the regulators. Yeah. If I may move on, I think this question I would direct it to Vin. I think a lot of people seem to be quite interested to understand the relationship between CBDCs and current popular cryptocurrency like Bitcoins. So people are asking, will CBDC replace decentralized crypto like Bitcoin? And what are some of the trends or the relationship between these two?
Okay, it's a good question. So I've been always talking about CBDCs, which is on a hybrid mode. And the advantage here we are having is we will be able to pair left side with right side. Left side is the hybrid CBDCs. Right side is the fully decentralized cryptos, including Bitcoin. So in terms of mass adoption, that's going to really help. But in terms of the traditional currencies or the legal tenders, that is going to challenge. So there were some talks about digital yuan challenging US dollar. So these are according to me, this is the same platform, but it is still going to be two different ways of handling it. Regulators are not going to get away CBDCs from on a fully decentralized mode.
So how do you feel that at some point they will be integrated, and then in that case, how will these kind of Bitcoins actually affect the CBDCs?
Yeah, it will be more of the Bitcoin holders or the Ethereum holders accessing CBDCs in a much faster and a much user-friendly mode compared to they are buying into fiat. So that is going to help the mass adoption, but still yet regulated.
I see. Okay. I see there are also a number of questions relating to crypto as investment instruments, right? I think some people are asking, will Bitcoin ever be a transactional currency? Some folks are also asking, are we in a bubble? And how do this Bitcoin does it actually have any practical utility? So I think these are usual questions that most people have, where does Bitcoin derive its value? Are we in a bubble? So we'll love to hear your views on that. Jimmy, would you like to get started?
Sure. Maybe I just talk about, I saw a question talking about crypto in relation to CBDC. So maybe I can just talk a bit about that as well first. So when you talk about CBDC, essentially there are two usage. Most central banks explore CBDC. Most of them, in fact, explore CBDC in the wholesale aspects. That means clearing between banks, clearing between two central banks, and cross-border kind of arrangements. And the objective is more around ensuring faster settlement, ensuring a single book of records, more than anything else. And those use cases will persist. If you look at Project Ubin's, a lot of discussion is around that as well. There are some CBDCs that's talking about more on the retail perspective. And if you think about it, from a central bank's perspective, most of the CBDCs they issue will actually be some form of STO. right? What do I mean by that? It means it's a token that is backed by US dollar if it's issued by US. JP Morgan did that, right, without a central bank. If it's Singapore bank that's issuing the CBDC, is likely to be Sing dollar back, and of course, China is a renminbi, yuan, backed currency. So it's actually a digital form of the currency. But what it allows is supposed to be in the context of ease of use by the public. So if I look at from a Singapore perspective, where it's a high population that's already having electronic banking system accessible to credit cards and so on. The retail aspects is obviously a lot less necessary for such a product. But in other countries where there's a lot of people that doesn't have a bank account, and this can kind of leapfrog to allow people to use the digital currency in the form of CBDC, in the form of their own digital wallets, there might be a use case for the retail aspects. So can it replace Bitcoin? So my sense is no, right? Because CBDs are still regulated, it's still government issued, and it's issued for many reasons, like I said, and the fundamentals behind it is still governed by the government or the monetary authorities, monetary policies, and so on. Whereas when you talk about Bitcoin, it's the only truly decentralized one. And then if you talk about the range of other cryptocurrencies, the utility functions will grow in different ways. Ethereum, Ether is seeing a rise precisely because there's a little bit more utility functions, right? Because people are building smart contracts, and as a result of connecting the use cases, the enterprise use cases, to a closed loop, Ether is a very natural form of transacting and closing it, right? So I do think that as this form of payment matures, and Jin brought up very well, right? And if the cryptocurrencies does become more and more stable, I feel that more and more people will tend to be able to use it. I won't go into commenting whether is it a good store of value, is it comparable to gold, and there's many discussions out there, and I think that there's various views, right? My view is that it's always supply and demand, right? If there's enough people who wants it, there's enough demand, whatever that product is, there will be value. Yeah. So
what about this question of, are we in a bubble? I think a lot of people are asking that. And when will the bubble burst? This is another variant of the question. Yeah.
Yeah. Good question. I wouldn't know, right? Because when it was 20,000, I told everybody it's a bubble. So it was a bubble, right? But it came up to 60,000, right? So my view is there is demand, there's supply, and when there's people who wants it, there will always be pegged at a certain value. What I can caution everybody is that if you do not know what's the fundamental behind it, who's buying it, and how much is it, so you wouldn't have a good aspect of the demand. So you wouldn't know, right, whether the bubble is going to rise or it's going to burst at what point. Okay. Yeah. So personally, I wouldn't put my milk money into it, right? So I will keep my milk money for my children, my baby. But if I have some beer money, I wouldn't mind putting some into it. So that's my stance.
Okay, thank you, Jimmy. I think the same question as a wrap-up question I'll ask to both Jin and Vin as well. Jin, would you like to share?
Yeah, sure. So the question comes up a lot, what's the intrinsic value? And I just sort of would ask that to anything. What's the intrinsic value of gold? We dig it out of the ground and then we put it back in the ground to keep it safe. What's the intrinsic value of the Sing dollar? It's the full faith and credit of the Singapore government. How long has the Singapore government been around? How long will it be around? So, and what is Singapore, by the way? It's an imagined reality, to use a term from Sapiens, right? Everyone agrees that the country exists, and so therefore it does. But if everyone said it doesn't exist, it doesn't. So all of money is based on a fiat, by the way, is Latin for faith, right? So money is just a belief system. So the more people that accept it, the more we can actually trade with it and get the things we need. And the reality is that I think Bitcoin has demonstrated over the last decade that enough people have bought and sold it and have probably purchased some things of value with it, that it is at least a good store value at the moment. So the latest argument is it a replacement for gold? Because gold kind of shares similar role, I guess, right now, other than its small industrial uses. So that's the way I would have people think about that. And then how does that relate to the price and the bubble? Is it a bubble? And again, I'll refer back to we're in the fourth cycle. If you take a look at the historical Bitcoin prices, take a look at the adoption rates, and as Jimmy said, take a look at where the demand is coming from. So there are some pretty large corporates looking at this. There are a lot of, frankly, sovereign banks that have funds in Bitcoin. So there is, at the very minimum, an argument that is a hedge against something, and that something is probably, inflation is a word that people bat around, and again, because of the amount of money that's been printed over the past 18 months. But then the other thing is, okay, where does this go? And I'm not here to predict prices, nor is that my role. But I will say, ask yourself what you think it can become. So right now, Bitcoin is a $1 trillion market cap digital asset. Gold globally is a $10 trillion market asset. So if you think it replaces gold, well, 1 trillion, 10 trillion. If you think it replaces one of the fiat currencies in the future, there's about $20+ trillion worth of USD floating around. There's about $40 to $50 trillion worth of RMB floating around. There's another 15 trillion or so euro. So if you see any kind of penetration or replacement of these fiats, these are the pools that it would be an alternative to. Then beyond fiat, there's assets. So there's, gosh, I had these numbers before, but there's something around, is it $200 trillion worth of global assets? Someone will have to correct my math, you can Google it. But regardless, fiat represents a very small amount of global assets. Most of it, frankly, is real estate. Real estate, if they one day become wrapped in NFTs, and the way you trade that is through some intermediary currency like Bitcoin, that could be another use case. So yeah, then if you took Elon Musk's view of the world of, okay, well, we're going to colonize another planet and there's going to be multi-planetary ecosystems, and this could be the currency of a multi-planet system, then take that into account. So it's not even just Earth's global GDP. So it depends on how you want to look at it. But if you want to look at it as, okay, this is a niche thing that's used for this particular thing, take a look at what the size of that market can be. And if you think Bitcoin's going to be 10% penetration, 50% penetration, or replace it entirely, then you can replicate the price. The supply is fixed. We all know there's going to be 21 million Bitcoin down the road. We all know there's 18.5 million Bitcoin now, so you can just do the math.
Yep. Great. Thanks, Jin. So Vin, you have less than 1 minute to share whether it's a bubble.
Yeah, Jin took most of my time, but let me just summarize. If you look at the past 3 or 4 cycles, right, you have seen that a similar trend is being valid. So whether it is a bubble or not, all of us are smart enough to realize the trend and guess our own values. But yes, in terms of personally, I've been a strong advocate, and I have moved more than 50% of my assets into crypto. So you can imagine that. But if you look at the public companies, what their approach is, anything between 7% to 15%. This is the kind of a ratio which they are moving into crypto, primarily into Bitcoin. So yes, it is still not the mainstream, but this is roughly the percentage which is going in. So okay, all of us can do our own math.
Thank you, Vin, Jin, and Jimmy. I think this has been a very wonderful sharing session. My key takeaway from this last question is that just like blockchain is on distributed consensus, right? So I hear you're asking us keep track of the consensus, track the fundamentals, look at who's adopting, and that might give us more insights into, is this a bubble or when it's going to burst, yeah? So I'd like to thank our 3 wonderful speakers for sharing their thoughts and generously taking time out to share with us. I also would like to thank all the participants. You guys have been wonderful. The questions that you asked are so good that I was thinking, making a mental note that I should take note of all these questions, right? So we're sorry that we're not able to get to all the questions, but we'll try to see how we can get this engagement going. I can see there's tremendous interest, and there's a lot of really good questions that you guys have asked, yeah? So I think with that, we'll need to wrap up the session here. Thank you very much for participating, and thank you very much for the 3 speakers for your time.
Thank you for having me.
Thank you, Prof. Thank you, everybody.
Thanks.